Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to discuss with you about a company called Piccadily Agro Industries Limited. We'll discuss their Q4 FY26 and full year FY26 numbers. We'll go through the con call and mainly concentrate on the expansion plan and how what they are doing at the back of it. And before we get into that, I'll just give a brief overview of what the company does, right? So the company has mainly two segments. One is the distillery segments through which compromises of ENA, ethanol, IMIL, country liquor, malt, and all these things. Okay. The second part is the sugar production. So actually, the company started with a sugar production and then went into the distillery part. So this is what the business model is. Okay. We should remember this because I'm going to talk about some demerger plan what the company is having, and it's going to be very important for it. And if you look at their numbers for Q4 FY26, right? So the revenue increased by almost close to 33% to 363 crores, and PAT was up by almost close to 14% to 45.9 crores. YOY revenue increased by around 28% to 1,143 crores, and PAT was up by around 33% to 139.7 crores. So this was the main thing. And if you did, they did how to say good enough growth for the whole year of FY26. And if you look at the revenue distribution, right, and if you divide that between the sugar and the distillery part, right, so the sugar contributed to 21% of the revenue. And if in the distillery also, they have two divisions. One is IMFL, which is Indian made foreign liquor, which contributed around 44%, and the other distilleries, which includes ethanol, ENL, IMIL, B2B, malt, contributed around 35% of the revenue. Let's look into the the expansion plan, which is going to contribute to the growth of the company, especially in terms of revenue and profit, right? So over here, the management clearly said that on the brownfield, which we're doing on the current plant, right, the how to say the expansion completed in the October of 2025, the ethanol ENA capacity expanded from 78 to 220 kiloliters per day. And if you took it from the malt capacity, it increased from 12 kiloliters per day to 30 kiloliters per day. So that was the brownfield expansion. And if you look at the greenfield expansion, which we're doing in Chhattisgarh, that they're doing, right? So the total capacity for that plant is around 200 kiloliters per day. So this plant is already commissioned, and the management has said that it's going to start contributing to the revenue of the company from the month of May this 2026. And in the next 6 months, they're going to ramp up and utilize it completely. So after this, both brownfield and greenfield expansion, their overall capacity will be around 450 kiloliters per day. And if you divide that between, the ENA ethanol and malt, ENA ethanol contributes to around 420 kiloliters per day, and malt contributes to around 30 kiloliters per day. And at the back of it, the management is very confident, and they're saying that the FY27 is going to be exceptional, and they're going to grow their revenue minimum between 60 to 70%. And if you look at this confidence in the management's voice, right, in terms of the giving the revenue guidance, is not just because they are trying to throw an arrow in the air and try to think that it's going to hit the target, but they're giving this comment at the back of what they have done, right? The brownfield expansion as well as for the the greenfield expansion that they have done. And and they should be able to achieve the 60 to 70% target, and it's going to be very beneficial to their shareholders. But in case they miss this target, I think the market is going to react very negatively, because the way the management is confident, the market believes that they should be able to achieve this number. And the other important thing which is happening within the company, right, is the demerger. So what the company is trying to do, right, they're trying to demerge the sugar business from the distillery business. So they already have got the board approval. The scheme is filed with SEBI, and KPMG is their advisor, and they're already working on it. And the management is saying that by in FY27, they should be able to complete this demerger. And if this happens without any issues, and in FY27 this happens, I think the value of the distillery business will even become higher, because the low margin business, which is of sugar, will be completely out of its book. So let's see how things progresses, whether they're able to achieve their 60 to 70% of the revenue growth, the demerger happens on time without any issues, right? So I'll definitely keep an eye, and I keep you guys posted. And if you like this video and the analysis, please do hit like and subscribe to my channel. Thank you, and God bless you.